Automakers have unveiled strategies to speed up electrification of new cars and trucks. Most major companies plan to roll out dozens of new electric vehicle models over the next decade. A lot of these companies are implementing electric vehicle sales targets, and so committing to eventually end fuel-powered vehicle production. One key player in this sector is Tesla, which has continued to impress investors and electric vehicle fans with incredible car models and designs. Hey guys, welcome back to Tesla Tomorrow. To achieve their electrification goals, automakers plan to invest billions of dollars over the next decade in research and development and building new manufacturing plants, particularly for battery production. Demands for EVs have grown markedly over the past decade, thanks to heightened environmental concerns, greater availability of models, increased cost competitiveness with conventional gas vehicles, and improved vehicle ranges. Those factors are expected to continue to drive increased adoption over the next decade, with the wide availability of tax incentives and other government programs supporting this trend further. Tesla is at the forefront of electric vehicle adoption globally, and will likely manufacture the majority of electric vehicles that are going to be used in the future. But does this mean there are no competitors for Tesla? Indeed, there are, and Elon Musk himself has admitted to it. What does Musk say, though? Keep watching to find out. But before we get on with it, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date with everything going on with Tesla. Tesla's CEO Elon Musk has admitted that Tesla's biggest competitors are the Chinese car manufacturers. According to him, he's got a lot of respect for the car companies in China, describing them as the most competitive in the world. Musk also said that the Chinese market is the most competitive, adding that they work the hardest and the smartest. Musk admitted that Tesla is competing with these Chinese companies, stating that it would probably be a company out of China, which is most likely going to be the second to Tesla. Musk further stated that Chinese electric car makers boasted advanced software designs that could shape the future of the automobile industry. China is an important market for the automotive industry, particularly for electric vehicles, due to its vast consumer market and strong central financial system. It is Tesla's second biggest market, and selling high volumes of electric vehicles in China is a large part of Tesla's business plan. China's mature industrial production chain and lithium-ion battery production capacity make the country an ideal location for manufacturing. Furthermore, China's rare earth metal production and electronics manufacturing capabilities are crucial for producing core electric vehicle components such as batteries and electric motors. Electric vehicles are big business in China, with the market accounting for 2/3 of electric vehicle demand in 2022, and Tesla, which began producing cars in its Shanghai Gigafactory in 2019, is not the only electric vehicle producer in this market. While other electric vehicle markets are still heavily dependent on subsidies and financial incentives, China has entered a new phase where consumers are weighing the features and prices of electric vehicles against gas-powered cars without much consideration of state support. It took China more than a decade of subsidies, long-term investments, and infrastructure spending to lay the foundation for its electric vehicle market to start standing on its own. Tesla grew significantly in China past 2020 after completing its Gigafactory in Shanghai in late 2019. This is beneficial to the company for several reasons, one of which is that production in China spares Tesla from import tariffs on finished vehicles. Also, Tesla's locally made cars qualify for government subsidies. And because China is an important supplier of automotive parts for the global industry as well as a perfect location for electric mobility and smart grids, it has been the perfect place for Tesla. There are a number of electric vehicle manufacturers in China. They all represent an enormous threat to Tesla's waning power as demand for its vehicles recently softened in China, which currently makes up 40% of the company's sales. Tesla's main competitor in China, BYD, as well as other Chinese manufacturers, posted huge sales growth towards the end of last year, while Tesla's numbers slumped more than 40% in December. BYD is considered one of Tesla's biggest electric vehicle competitors, especially in China. In fact, most investors believe that China's BYD is quickly gaining on Tesla, which is the world's leader in electric car sales. However, it is important to note that Tesla is still in its early stage and is not below expectations if it produces fewer cars than the BYD. Tesla has an incredible profit margin, higher than every car company including BYD, which sells the most passenger electric vehicles in the world. While BYD leads by sales volume, having for the first time in 2022 dethroned Tesla as the world's top-selling electric vehicle brand, Tesla makes far more profit per vehicle sold than its Chinese competitor. In the first 3 quarters of 2022, BYD sold 1,175,321 passenger electric vehicles. This includes both fully electric cars, as well as plug-in hybrids. On the other hand, Tesla sold 908,573 electric vehicles over the same period, with BYD leading Tesla in delivery numbers by nearly 30%. However, on net profit per vehicle sold, Tesla leads by miles, reporting a net profit of $8.87 billion in the first 3 quarters, while BYD reported a net profit of $1.14 billion during the same time period. Also, on a per-vehicle basis, Tesla made $9,761 in profit, over 8 times more than BYD, which made $1,190 in profit per car sold. Also, top electric vehicle investors may be starting to see the strong potential that Tesla has in the electric vehicle market. Berkshire Hathaway recently sold almost 6 million shares of BYD for about $145.38 million. Warren Buffett is one of the most successful and well-respected investors of all time. And that was not the first time that his firm is selling its BYD shares. Before now, the company had sold some of its stock in the electric vehicle company. Berkshire sold less than 1% of its stake in BYD, according to a Hong Kong Stock Exchange filing, which left it with 219 million shares, or about 20% of the stock outstanding in the company. There is no doubt that BYD stands as a strong competition for Tesla, but Tesla is doing incredibly well in China. There is, however, one disadvantage for Tesla in the Chinese market. As long as the cars sold in China were built in the US, Tesla was at a competitive disadvantage. For instance, importing cars from California result in huge expenses, and hefty tariffs and taxes on foreign-made goods is another expense to be made. Furthermore, government electric vehicle incentives were designed to support state companies, and generally didn't apply to imported vehicles. Domestic electric vehicle makers such as BYD benefited from purchase subsidies, and were able to undercut Tesla on price. But the narratives may be changing since Tesla has started to lower the prices of its cars in China. Tesla has contributed hugely to the Chinese auto sector. It patronizes local suppliers and helps local employees to learn valuable new skills. The electric vehicle company's presence has also forced local automakers to raise their electric games. Let's just say that it's a mutually beneficial relationship. Tesla gets access to the world's largest auto market, and China gets access to the world's most innovative automaker. Tesla had 3 objectives when entering the Chinese market. First, to expand its share in the world's largest electric vehicle market. Second, to stay independent of China's requirement for foreign automakers to create joint ventures with Chinese manufacturers. And third, to protect its intellectual property built into its growing lineup of electric vehicles. For Tesla, investing in China was a major turning point, as the automaker became the first foreign car manufacturer approved to operate fully independently while still retaining 100% ownership in China. China, on the other hand, has created a profitable trading environment for the car company. After automakers were forced to shut down operations in China due to the pandemic, the Chinese authorities went to great lengths to help Tesla get back into production mode quickly. As Toyota, Volkswagen, and other foreign car makers struggled to restart their lines, Tesla's Shanghai Gigafactory was already back to making cars, and in just a few months, the production rate was up 3,000 a week, higher than before the shutdown. For successful market entry into China, market entrants, especially auto companies, must rethink and redesign their products to take full advantage of new technologies available in the country. That is what Tesla did with the EV, exploiting advancements in manufacturing and supply chains only available in China. On the demand side, Tesla established a strong brand image, satisfying investors' and customers' desires to products that have strong performance, usability, design, and also prestige. Do you also share these thoughts? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.